Good morning. This is Bloomberg Daybreak Europe. I'm Oliver Crook in London, and these are the stories that set your agenda. Blowout GDP in the USA. American growth crushes estimates in the third quarter, coming in at 4.3%, a full percentage point above average estimates. The Santa rally marches on. The S&P hits a record. Gold breaks through 4,500 for the first time ever. Markets on both sides of the pond close early today. And the U.S. accuses China of unfair trade practices in semiconductors, but says it will hold off on imposing additional chip tariffs for now. Good morning. Happy Christmas Eve. Here is the picture for futures this morning across Europe and the United States. Euro stocks futures about flat, we'll say, down ever so slightly after a positive session yesterday. Same story here for the FTSE 100 futures. S&P down 0.1 of 1 percentage point, and NASDAQ similarly down a little bit after, again, a positive session in the U.S. yesterday and a couple of positive sessions from Friday of last week. Taking the picture across asset, let's take a look at what we've got. The data came late, but Christmas came early for the bulls in this equity market. We have MSCI World Index at an all-time high this morning as we head into Christmas. The U.S. Treasury yield, the 10-year yield, basically flat, steady. But something very interesting happened on the 10-year yesterday. Right when we got that GDP print out from the United States, we saw these yields rocket higher, about 5 basis points. That has come down to basically where we were. So some mixed signals for what that GDP reading actually means for the markets. We'll get into that a little bit later. And gold, obviously the sort of shining star of the week. We broke through 4,500 a little bit earlier. We're down just a bit this morning, still up a little bit, but still under that 4,500 level. And Brent crude steadying after some of those headlines that we saw early in the week out of Venezuela. Let's see how the Asian markets, however, are faring with Winnie Su in Taipei. Winnie?
Yeah, so we are seeing some modest gains here in the Asian markets as well. So we've got an MSCI Asia up about 0.2%, rising for a fourth day, but it's taking us back to that highest level in about 6 weeks. And overall, technology shares are still back in the driver's seat right now. And we have that Santa rally here going on in Asia as well. However, overall trading volume has been quite thin because we have some of our key markets closing earlier today ahead of that Christmas holiday tomorrow, including markets in Hong Kong, Singapore, and Australia. However, one key asset that we're really focusing on today is the Korea won, as it has actually strengthening about 2% so far today, especially after authorities coming in and warned that excessive weakness in currency is not desirable and that the FX market will soon see that strong determination from the government. So that has really supported the won that has really been struggling and headed towards that 1,500 level that we are closely watching in terms of the key psychological level that was breached back in the global financial crisis. And that's a very interesting timing, as it really came after how the authorities in Japan stepped in with similar verbal intervention yesterday. Now, we also flip the board and take a look at the overall picture for Asian stocks this year, because taking a step back, it has really been a spectacular year for our region. In fact, up about 25% so far this year, beating gains in Europe and the U.S., which is quite rare, actually. And a lot of factors have really been playing into play, including those including, the DeepSeek moments back in February and U.S.-China tensions easing, and that global tailwind from the AI boom. Not to mention, you've got a weaker dollar and also diversification away from U.S. assets. So that has really been helping that outperformance of Asian stocks, and we're likely going to see how these themes continue to play towards 2026.
Well, Winnie Su, thank you so much in Taipei for that roundup of Asian markets going into Christmas Day. The United States has accused China of engaging in unfair trade practices related to chips, but says it will hold off on imposing new tariffs until at least mid-2027. Let's bring in Bloomberg's China economy and government editor, Alan Wong. Alan, what do we know about this investigation into Chinese chips, and how much sort of faith do we have in the Trump timelines in terms of imposing tariffs or not imposing tariffs?
Yeah, Oliver, that was the result of a nearly year-long investigation into China's chip policy. And it's worth noting upfront that these are the kind of chips that we put in legacy electronics and not the kind of cutting-edge semiconductors that have been dominating headlines in the last handful of years. So the finding from the U.S. investigation is that China has used aggressive and sweeping non-market policies to support its domestic chip sector in order to dominate it and make other countries reliant on it. And the findings will enable the U.S. to impose tariffs on those chips, but importantly, the Trump administration has held back on that. And there is a timeline that they've given, which is 18 months, when they'll have to make a determination of what measure they will take. And the tariff rates haven't been announced yet, so this amounts to an option in case they need to escalate the trade tensions with China. So this is key because it shows that while the U.S. is not happy with the industrial policies of China, it is not right now imposing any measures in response because Trump has agreed to a trade truce with China and is planning to meet with Chinese President Xi Jinping in the coming months, many times. So this announcement sends a clear signal that Trump still intends to keep relations on a stable path and while maintaining some options going forward if the trade talks breaks down at any point in the next year. So when that happens, the impact will be dependent on just how high the tariff rates are and on what devices specifically that the U.S. will impose on China's exports. So one thing to keep in mind is that the legacy chips that go into electronics like fridges or cars and medical devices, they will raise the input prices for U.S. companies. So any measures that the Trump administration takes at the end of this 18-month period will also need to take that into consideration.
Well, Bloomberg's Alan Wong, thank you so much for joining us from Hong Kong for some important context on that story. Now let's get to that U.S. Economic growth story. The economic data, once again, leaving investors split on what it all means for monetary policy. On the one hand, the U.S. economy expanded in the third quarter at the fastest pace in 2 years, bolstered by a resilient consumer and business spending. On the other hand, there's some skepticism about the reliability of the top-line GDP data. Here to make sense of all of it is MLive currency and rate strategist Ven Ram. Ven, you've done the deep dive here. What do we make of this print out of the United States?
Morning, Oliver. I think that, the misconceptions aside, some of the concerns are warranted, but I think on the whole, you've got to take the data for what it is, which is one of stellar growth. I mean, consumer spending is booming and exports are on the rise as well. So this economy is well underpinned by demand. So I think that resilience in the U.S. economy will continue. Let's keep in mind that, the Federal Reserve is forecasting growth to come in at 2.3% in 2026. That is fully half a percentage point higher than what they were expecting just in September. So they're fully cognizant of the AI boosting productivity scenario, and they're on board with it. Now, the question is, Oliver, this raises tension within the Fed because, on the one hand, you've got an economy that's growing so well, and you've got core PCE that's still hovering around 2.8% on average for this year. So should the Fed be cutting rates when the economy is this resilient, running this hot, and your core PCE inflation is nowhere near 2%? And that's the tension for the markets as we look forward to 2026.
Yeah, absolutely. I mean, you got a hot American economy. Inflation is a big question mark. And of course, a lot of pressure coming from the White House on the Federal Reserve to move. I want to talk a little bit about the precious metals rally that we've continued to see throughout the week. We saw gold break through 4,500. What is driving this? Is this just sort of a natural hedge to some of the risks we're seeing? How do you interpret what we've been seeing in the precious metals market?
I think that this is more than just a story of hedge, Oliver, because, if you see what has happened, silver is leading gold on the way up in the latest leg of rally, and that is unusual. It's a bit like the tail wagging the dog. Silver is going up and up and up because of the sticky supply scenario that we are seeing in the markets, particularly in Shanghai and elsewhere. And therefore, silver is bid and gold is just riding on its coattails. And the market has got $5,000 an ounce in its crosshairs. So to an extent, this is going to become a self-fulfilling prophecy for the market. So it is easy to see the next leg higher in gold, albeit investors should be wary of corrections. The one we saw in October when it sold off 10% within the space of 3 days.
It's easy to see the leg higher. Is it easier to see the leg higher or lower for interest rates going into next year? What are your forecasts looking at central banks into 2026?
Well, I think that, the markets are underpricing how far the Bank of Japan should be going with their interest rates. Because if you look at the BOJ's own projection of interest rates, they expect inflation to come in at 1.8% next year. That is way lower than what realized inflation is, which is around 3%. So even taking their 1.8% projection at face value, and the economic growth forecast that they're forecasting, which is above trend, that posits a neutral rate of around 150. And we are at least three rate hikes away from that. So the question is, the Bank of Japan should be aggressively raising rates. The question is whether they are willing to do that.
Well, Ven Ram, cross-asset strategist for Bloomberg Markets Live, thank you so much for your time this morning in the context of putting around some of that GDP figure out of the United States and what to expect from central banks in the year ahead. For the day ahead, today we're watching the U.S. markets, which will be closing early today, as well as European markets. So 1 p.m., I believe, is the time for when the U.S. market will close. We're looking also for U.S. mortgage applications, as well as U.S. jobless claims, all trying to fill out that data picture from the United States after that exceedingly hot GDP print that we got yesterday. And you can get a roundup of the top stories you need to know going into your day. Today's edition of Daybreak, we're focused squarely on the precious metal rally, those H-1B visas that Trump basically was saying you need to be charging companies $100,000. That was upheld by a judge, and BP getting closer to selling its stake in Castrol. We'll have more on all those stories throughout the hour this morning. Terminal subscribers can go to DAYB Go to watch all of those stories and many more. Coming up, onto geopolitics, Libya declares 3 days of mourning after its military chief of staff is killed in a plane crash in Turkey. We'll have details on that story next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Novo Nordisk surged on Tuesday after it won approval to sell a pill version of its blockbuster obesity jab Wegovy in the United States. The CEO of the company spoke to Bloomberg about how the development could shake up the competitive weight loss market.
This is really going to be super exciting for the millions of patients that have been waiting to get their hands on a GLP-1 pill. And for the first time, we are having a pill that has an efficacy of some 17% if you take the pill regularly. And 1 in 3 people are going to actually reduce up to 20% weight loss. I think that data speaks for itself, and we are super excited, of course, to be the first to the market. And we're going to go all in trying to make this a huge success.
Well, moving forward, I mean, beyond just these first few months, after Eli Lilly does have their pill on the market, how do you plan to compete? What is your strategy there? Given my understanding is that there's likely going to be no restrictions when it comes to food, when it comes to drinks around Lilly's version.
Yeah, so as I mentioned, there are no other phase 3 trials of oral GLP-1 that has shown this level of efficacy. This means that for the first time ever, people do not have compromise between either taking an efficacious injection or a convenient pill. For the first time ever, you have the same efficacy of 17% in injection or a pill. You can take it on a daily basis as a pill or a weekly injection. And that, I think, is the key selling points with Wegovy pill. We also have more than 10 years of course, experience with regards to safety data and what have you. That's why it's called the Wegovy pill, which means that this pill is not only going to reduce your weight, it also has protection for your cardiovascular systems. So this is a phenomenal pill, second to none, I would say, and we are very ready to compete with it.
Let's talk about how you're going to sell it. Through what channels will you sell this Wegovy pill? And will all of those channels be available at launch?
The quick answer is yes. We're going all in. We're, of course, going to sell this through our own websites, NovoCare Pharmacy, as well as all of our partners, be it Ro, LifeMD, Costco, Weight Watchers. Everyone that you can imagine is going to start launching this at the same time on the day of the launch. Trump RX, of course, will be coming up soon as well as, of course, the traditional channels that usually medicine is procured in U.S.
Novo Nordisk CEO there, Mike Duster, speaking with Bloomberg's Katie Greifeld a little bit earlier yesterday. Some other stories making news this morning. A federal judge has ruled that the Trump administration can go ahead with imposing a $100,000 fee on new H-1B visa applications. The decision is a setback for the U.S. tech companies that rely on hiring skilled foreign workers. The judge says the move is lawful, but the U.S. Chamber of Commerce, which sued the bloc to block the proposal, can still appeal. Nearly half a dozen tankers laden with crude have departed from Venezuela's coast despite increased pressure from the United States. Data from maritime intelligence firm Kepler show most of the tankers are headed to Washington, and at least half of them are chartered by Chevron. This comes as the Trump administration intensifies efforts to curb Caracas's oil revenue by targeting sanctioned vessels. Now, Libya's military chief of staff has been killed alongside 7 other people in a plane crash in Turkey. Mohammed Ali Ahmed al-Haddad had been returning to a trip to Tripoli from Ankara when the plane reportedly reported an electrical malfunction shortly after takeoff. For more, let's bring in Bloomberg's managing editor for the Middle East and North Africa, Onur Ant. Onur, what do we know so far about the crash? And give us a little bit of context of why this is so important here for Libya.
Sure, the jet that was carrying the Libyan delegation crashed shortly after its takeoff at about 8 p.m. local time in Ankara. That's the Turkish capital. It did notify the air control that it had an electrical fault and requested an emergency landing. While preparations at the Ankara's Esenboğa airport were underway for that landing, radio contact with the airplane lost, and its wreckage was later found by Turkish authorities in the Haymana district in Ankara. So the entire Libyan delegation, consisting of 5 people, as well as 3 crew members, were all declared dead after the incident. And the head of the Libyan delegation was Libya's military chief of staff, Mohammed Ali Ahmed al-Haddad. He was a respected figure, obviously, back in Tripoli, but also he was a key figure in UN-backed talks aimed at unifying the country, which has been split between 2 rival governments, with one being in the west, in Tripoli, to which al-Haddad belonged, and the other one in the east, in Benghazi.
And what can you tell us about what he was doing in his visit to Turkey, which is increasing in sort of geopolitical importance as we sort of go year to year?
The Libyan delegation was there to discuss military cooperation. The cooperation between the 2 countries has been very strong in the last several years. Turkey has been a strong supporter of the government in Tripoli, and that support has become more pronounced back in 2019 and 20 when that government was under assault by the rival government in Benghazi, and it was pretty much the Turkish support that sort of allowed it to stay in power. Ever since, we know that the Tripoli government has been deploying various Turkish military equipment, including Bayraktar drones, Akıncı and TB2. The latter is very famous, very well known in this part of the region and this part of the world. It's been widely used and successfully used in conflicts and the wars from Ukraine to Nagorno-Karabakh, where Azerbaijan and Armenia fought a war, 44-day war back in 2020. So that military cooperation between the 2 countries was the reason why the Libyan delegation was traveling to Ankara and back to Tripoli yesterday when their jet crashed.
Well, thank you very much to Bloomberg's Onur Ant for that update. And coming up on the show, how the Chinese battery giant CATL is powering through a bumpy road ahead. More on today's Big Take. That's next. And this is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's get to China and its battery giant CATL facing some dips in the road ahead due to government policy and slowing growth. Today's Big Take looks at how its billionaire founder is having to change strategy amid geopolitical challenges. We're joined now by Bloomberg's Asia transport reporter Linda Liu. Linda, take us through a little bit what CATL is looking at to replicate its success at home in an overseas market. You know, how is the battery maker doing that, and what are the bumps that it faces ahead?
One of its big strategic focus is localizing production in Europe. They've built 2 factories already, one in Germany, one in Hungary. They're building a 3rd one with Stellantis in Spain. So you really see they're hoping to having this production capacity in Europe to evade the tariffs that the EU has introduced. You see, for example, the tariffs on Chinese EVs. So hoping that when they're closer to their customers in Europe, such as BMW, Mercedes, or Volkswagen, they can be faster to respond to the customers' demands and come up with hopefully more affordable batteries that can help these automakers churn out more attractive and affordable EV models in Europe. And in the US, they're going through a licensing route in a partnership with Ford, hoping that, despite these barriers that the US has put up that effectively bans a lot of the Chinese industries from accessing the US market, they still can have a little bit of access through a licensing model with Ford shouldering most of the manufacturing in the US market.
And so how is CATL managing those challenges? Do you think of CATL as really having a kind of monopoly on this market? And also, at what point are they going to get to sort of full production capacity here in Europe in order to sort of deal with those customer demands from the European side?
Yeah, it's a really good question because despite, CATL being the world's largest EV battery maker, powering 1 in 3 EVs out there on the roads, it's still facing competition from its South Korean and Japanese rivals, which coincidentally will get a leg up, with the US tariffs and also favoritism towards countries, that are not China. So CATL is hoping that by working with US manufacturers in licensing deals, it can overcome that kind of geopolitical barrier. And when you look at Europe, they are hoping to ramp up production, but right now there's still some bumps in the road, like you have said, because the efficiency as well as cost are not at the level they're hoping for as they've seen at factories at home. So that's something they're hoping to iron out. With the Hungary factory that's coming online very soon next year, they're hoping that they can achieve greater efficiencies by learning from the mistakes that they may have made with their factory in Germany.
Well, thanks very much, Linda Liu, for that update on CATL and the plan ahead for that battery giant across the world there. I'd like to get some breaking news now, some M&A in the pharma space. Sanofi to buy Dynavax for $15.50 a share in cash. This is to add to their hepatitis B portfolio and the drugs there, expecting that deal to not have any impact on the full year guidance. That is according to Sanofi, and that the tender offer at the equity value of $2.2 billion. So that is some of the M&A we are watching this morning. Now let's get to some other stories making news. BP is said to be nearing an agreement to sell a majority stake in its Castrol unit to the investment firm Stone Peak Partners. The Wall Street Journal says BP would get about $6 billion for a 65% stake in the lubricants business. Former CEO Murray Auchincloss today told Bloomberg last month that BP is planning to divest $20 billion of assets by the end of 2027 to improve its balance sheet. The move comes as Meg O'Neill prepares to take that over at the helm of the oil major in April. The Trump administration has imposed visa sanctions on a former EU Commissioner, Thierry Breton, and 4 other people trying to make American tech companies police political speech. In a post on X, Breton responded to that the European law was voted with a broad-based support, writing, quote, "To our American friends, censorship isn't where you think it is." The State Department also targeted activists and nonprofits focused on digital hate speech and countering extremism. Coming up, Russia continues to pummel Ukrainian energy infrastructure as temperatures across the country plummet. More on the state of the U.S.-led peace talks and negotiations. That's next. And this is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Oliver Crook in London. These are the stories that set your agenda. Blowout GDP in the USA. American growth crushes estimates in the third quarter, coming in at 4.3%, a full percentage point above average estimates. And the Santa rally marches on. The S&P hits a record. Gold breaks through 4,500 for the first time ever. Markets on both sides of the pond close early today. And the United States accuses China of unfair trade practices in semiconductors, but says it will hold off on imposing additional chip tariffs for now. Let's get a look at futures indexes this morning ahead of that early close in the sessions in the United States and in Europe. You can see across the board a bit of red on the screen. I'm tempted to call that fairly flat for the Euro Stoxx 50, down barely 5 basis points. Same story there for the FTSE 100 futures, down about 0.1%. S&P futures down basically the same amount. Same with the Nasdaq. We should say it's been a fairly strong roll for the S&P and the Nasdaq over the last couple of days, so giving ever so slightly more of that back today. When we look at the picture across asset, something a little bit similar. We look at the MSCI World Index that has been hitting a all-time record high. We got that GDP data. It came late, but what came early was a present from Santa Claus for the bulls in this market. You can see the MSCI World Market there at an all-time high. U.S. Treasury yields that are pretty flat today. We should say there was some pretty interesting action in the rates markets after we got that GDP print. The market really trying to figure out what to do with that. We had yields fire up to about 4.2%, and then came right back down. Gold there still trading just below that record past 4,500, and Brent stabilizing this morning after a little bit of drama earlier in the week. Now, Russia has launched a major attack on Ukraine, killing 3 civilians, including a child. The missile and drone attack hit energy infrastructure in the Odessa region on the Black Sea. It comes as negotiations led by the Trump administration press ahead to end the nearly 4-year-long war. Bloomberg's Jill Desis joins me now. Jill, what do we know about the latest attacks now hitting as Ukraine really enters this winter and we have really below freezing temperatures really across the country?
Yes, that's right, Oliver. Well, look, what we've heard from President Zelensky is essentially that this strike involved 650 drones, 30 missiles. As you mentioned, obviously, a handful of fatalities, including a child, many injuries. These were pretty widespread, taking place across a number of regions of Ukraine, including some of the central areas. And then, as we've discussed, I mean, the idea of power cuts here, that's coming from the energy ministry, the grid operator saying that they've imposed these emergency power cuts. So you're really seeing some pretty widespread damages here. The other thing that I'd point out, I mean, as Zelensky has said, is that this is taking place right in the middle of peace talk negotiations. The Ukrainians were just in Florida, had been traveling back over the weekend after what seemed like fairly promising talks with the United States. But this is obviously, something that implies that, potentially there's some concern about a setback.
Thanks very much, Jill Desis, for your update there, for the sort of important update on Ukraine as we face, what was initially that deadline to end the war, which would be tomorrow, of course, seems fairly out of reach at this point. Russia's recent attacks on energy infrastructure in Odessa region, the Black Sea, come at a time of year when temperatures are around freezing. We should say in Kyiv, for example, today, temperatures will reach a high of -7 degrees Celsius and a low of -9. Maxim Timchenko, the CEO of Ukraine's biggest private energy infrastructure developer, DTEK, told Bloomberg this is going to be the hardest winter yet.
Unfortunately, just in these minutes, we are under massive attacks of Russians, and the major target of today's attack is power station. So, as you know, we been attacked, only power station of the attack, more than 6 times since September this year. And I believe that this coming winter will be the hardest winter since full-scale invasion.
Some fairly stark appraisals there from the CEO of DTEK. I'm joined now by Hanna Shelest. She is Director of Security Programs at the Ukrainian Prism, a leading think tank specializing on foreign policy and international security. Hanna, thank you so much for speaking to us this morning. What is a difficult day for Ukraine heading into this winter? How are things on the ground at the moment, just to give us a sort of account of what life is like at the moment before getting into the broader discussion?
After quite a hard week, because only in Odessa we didn't have electricity for 4 days at all. So it means no electricity, no heating, and in some places no water, because all of these dependence in the old town. We still have some neighborhoods where they don't have electricity. That's already day 9. And definitely when you have almost zero outside, that's quite problematic, and in winter, dark days. But at the same time, now we are talking with you. Luckily, I have electricity this morning. It makes the mood of Christmas Day a little bit better. But to compare, like yesterday, 5 hours, there were no electricity during the day, and that was considered as one of the good days.
Yeah, and I want to talk a little bit more broadly about what has been going on. We've had some serious news out of the EU on Friday, that 90 billion euro loan that was approved to Ukraine. How fundamentally do you think that that changes the dynamic in terms of leverage in these negotiations with Russia? And critically, when do you expect that money to start arriving in Ukraine?
You know, that's very problematic. On the one hand, you have good news because Ukrainian budget would have support the next year. And it was a very difficult decision. We know that there were a lot of negotiations. But at the same time, that is very bad news because originally they've been negotiating, they are giving to Ukraine money from the Russian frozen assets. And that would be really fair because Russia is destroying Ukrainian economy. Russia is destroying Ukrainian critical infrastructure. And this money should go for this. So Russia should pay for the reconstruction, not the European taxpayers. However, because some countries were blackmailed by Russia, plus they've been afraid for some legal consequences, even that there are a lot of legal research now saying that they had a possibility to do this. We are where we are. So as for now, that is European money, and they would be crucial for supporting Ukrainian economy next year.
And thinking about where we are in the peace negotiations, obviously the Trump administration had wanted to end the war, initially in 24 hours and then set the deadline for Christmas. Obviously, that seems like it's out of reach. How do you assess the peace negotiations as we stand now and the status of that 20-point plan and what it contains?
You know, it's very difficult for me to name them peace negotiations. Probably that is just professional deformation, as I've been defending PhD on the end of the conflict. But the issue is that as for now, we have U.S.-Ukraine negotiations. We're talking about possible guarantees for Ukraine in terms of the security, in terms of the reconstruction, and possible concessions from the Ukrainian side. But peace negotiations are between the conflicting parties. And till now, we haven't heard Russian statements regarding the exact points of these proposals, except of one thing, that de facto in the latest statement this week, what I heard, they were just repetition of their demands back April 2022. So they still would like to have the territory that they occupied, plus the territory that they never occupied, but they decided that they would like it. They would like to cut Ukrainian sovereignty. They would like to undermine Ukrainian armed forces, the only real guarantee of the Ukrainian security. So let's see what would be the official response from the Kremlin. And also let's see it by deeds. Yeah, as it said, the deed speaks louder than the words, and you see the deeds. During the negotiations, Russia just intensified the attacks against Ukrainian civilian infrastructure.
And thinking about some of the very difficult compromises that invariably will have to be made on both sides of this negotiation, we heard Zelensky talk about that, I believe it was yesterday. Thinking about the sort of idea of this referendum that Zelensky floated about potentially surrendering effectively the rest of the Donbass, maybe not legally, but sort of de facto, do you think that that is something that wins more and more popular support within Ukraine if it is accompanied by American security guarantees and a very clear security architecture?
Unfortunately, my answers would be no. First of all, because there is no compromise. Ukraine never demanded anything from the Russian Federation. Compromise, it is when both sides has the certain demands and then receive something. Not satisfied, but at least something. Ukraine is a victim of the illegal aggression that's accepted and confirmed by all international organizations and international court. So let's name it what it is. It is not a compromise. It is the attempt to make Ukraine to surrender, or at least to make some concessions. The second thing is that what does mean U.S. security guarantees? We really would like to have them. But as for now, it's very unstable. It all depends on the political will anyway. Even Article 5 of NATO and what we are receiving, it is the promise of the guarantee similar to Article 5. But Article 5 is just saying that attack on one NATO state means attack to everybody. And in this case, they can use any means, including military, to defend. So can use, cannot use, including military, but doesn't mean that exactly military. That's why it took now these Miami negotiations so long, because they tried to put something real and legally binding, because new president, for example, or this president with other advice, and they can decide not to protect Ukraine. Ukraine already had, don't forget, Budapest Memorandum, when we rejected our third biggest nuclear arsenal in the world. What we received? So-called security assurances. Where are we now? In the full-fledged war.
Well, Hanna, Shelest, thank you so much for your time. Director of Security Programs at Ukrainian Prism, joining us there from Odessa, which has power at the moment, but has been suffering great blackouts over the last couple of days and weeks as sort of temperatures descend below freezing. Now, the French National Assembly has approved a stopgap budget law for next year after failing to agree on the full fiscal plan. The so-called special law effectively rolls over the 2025 fiscal plan into the new year, allowing the state to continue to collect taxes and, critically, to borrow money. For more, let's get to Jean Dalbar. He's the economist over at Bloomberg Economics. So still no full budget. Are we making progress? Where are the sticking points? What can you tell us as we head out of 2025?
So obviously, we still have a very fragmented parliament between the Conservative Senate and the left-leaning National Assembly. And on top of that, we have political parties which look unwilling to compromise, and especially the Socialist Party, which is the kingmakers on the budget discussion. And in particular, parties are looking to bring home some major concessions from the government and some major symbolic wins, like higher taxation on wealth for the Socialist Party. And this doesn't help to get a compromise. In practice, however, we understand that a compromise is within reach. 10 billion are missing to reach the 5% of GDP deficit target for 2026. And we understand that this is something that could be reached within the early days of January.
And how surprised are you that we still have a Prime Minister Le Cornu? This is someone who I think at certain points we thought maybe not even lasting a week. Is this someone that's sort of here to stay in the French political establishment? Can he get things done here in France?
I think he can. Obviously, this is a disappointment for him, especially because he was the one really pushing for a new approach in French politics, which is to get political parties together and to compromise. Still, it's difficult for him because with both the center-right and the Socialist Party unwilling to compromise, it's really hard for him to push through its new methodology, its new approach to French politics. However, we think and we expect a compromise to be reached, especially because the Socialists and the center-right, they are unwilling to risk snap elections, and we expect them not to risk a no-confidence vote. So that's really important for Le Cornu. And all in all, I would say that political risk is fading in France, at least the risk of snap elections. And it is particularly true if you look at the spread against Germany, which has tightened to its August 2025 level. So it's a pretty good news from a market perspective.
Yeah, that's right. Jean Dalbar, thank you so much from Bloomberg Economics for his assessment of the fiscal situation in France and, of course, the political situation that will govern it. Coming up, we'll discuss the rapid increase in so-called rocket ship unicorns. Those are startups founded since 2020 that are already worth over $1 billion. We'll also take a closer look at the prospects for European tech in 2026 when we speak to Christoph Klink. He's a partner at Antler. It's a venture capital firm. That's next. And this is Bloomberg. Well, as year-end approaches, research suggests that London has helped fuel the rise in so-called rocket ship startups in 2025. Those are companies that are founded since 2020 and are already valued at more than $1 billion. Venture capital firm Antler says the city is home to 5 of 7 tech startups that achieve unicorn status in the second half of this year alone. We're joined now by Christoph Klink. He's a partner at Antler. Before we get into your forecast for going into 2026, you've done a lot of research and looked at what the year behind us looked like. What did it look like as we're closing out the year? Tech startups in 2025. What do we get?
Good morning, all. Thank you for having me. Pleasure. I think we looked indeed at kind of the emergence of a new breed of companies that scale very, very fast. And we asked ourselves, what does it actually take to get to unicorn status and smash beyond that sound barrier at rocket speed? And we see that new breed of companies that have done that in just about 2 years' time, where on average it takes about 7 years to get to unicorn status. We see that being fueled, yes, by a very, very strong emergence of and re-emergence of the London and UK ecosystem. But the 3 underlying drivers to that. One is very prominently AI. About 60% of those companies are coming from the AI sector, and probably 100% of them are leveraging AI in how they built their companies. The second one is very, very strong technical talent behind it. Close to 100% of the founders now come from technical backgrounds, which is a real bump up from what we've seen before the period of 2020. And lastly, we see an intense focus on execution, on speed of those companies that are coming out of the gate very, very strong.
Well, so let's talk about that. That's how we're sort of situated coming into next year. What does that mean for 2026 in terms of the kinds of companies, the kinds of scale that they can achieve? And is this just basically an AI-driven rally? And is there a risk to that bubble could burst?
I think there's two different ways of looking at AI. One is the underlying technology, and we believe that underlying technology is going to be a wave of technology that empowers a lot of companies to be building on top of that new technological layer, and that allows them to build products at a speed that they haven't been able to build them previously, and that also allows them to build them at a quality that they haven't been able to build them, and that allows them to build them at way lower costs. So it makes all of the ships kind of float a little bit higher, since you can build better products in a shorter amount of time with way fewer resources. So I think as an underlying trend, the AI sector will empower the growth of startups, not only in Europe, but internationally. I think secondly, we will see an increasing amount of competition across a number of business. What we're seeing is that the barrier to be building an initial product, to be building an initial MVP and shipping that to customers making first revenue has gone down quite dramatically. So when we look across our portfolio, it now takes companies only a third of the time to get to first revenue compared with just 3 years earlier. And we see that companies are making 5 to 10x, depending on which metric you use, the amount of revenue within the first year of them being in the market. And that leads to increasing competition and an increasing race there. So we'll definitely see that there will be fierce head-to-head competition in the market. We'll likely see that some of the companies will be struggling to compete. And those that are not leveraging, that are not building AI first, and those that are not driving execution to their max will likely fall behind.
I want to pick up on two of the points that we've discussed this morning. The first is you're talking about breaking that first sound barrier, reaching $1 billion valuation. I think one of the big issues that's been highlighted in Europe, particularly by Mario Draghi, is there's not been a single company founded in Europe in the last 50 years that's broken a market cap of $100 billion. How do you get to past that $1 billion, talking about $10 billion, $50 billion, $100 billion, to start to compete with some of these American companies? What is standing in the way here in Europe?
It's an excellent question. We intensely around the Draghi report also looked at that. One of the key factors that we found there, beyond everything that I think has been discussed quite amply, is that historically, so in the era leading up to 2020, Europe has been bringing forward way fewer technical founders. And when you look at the top 10 tech companies in the world, you'll see that 95% plus of the founders have a technical background. They're building real technology. When you look at the 10 fastest growing software companies in the world, more than 90% of the founders have a technical background. But for European unicorn companies pre-2020, you'll find that it's only about a quarter of them. And that has led to businesses that were kind of less technologically deep, less technologically foundational. And I think one of the things that we see happening quite quickly and see changing quite quickly is the technical foundation of the companies and their founders that are being built right now, which gives us very positive hope to the next decade of growth.
And you talk about competition, fierce competition, tech rivalry. We have sort of every day, the last couple of weeks, sort of headlines from the U.S. administration trying to sort of scale back European regulation on tech in order to benefit a lot of these American tech companies. Is that a concern that basically they will be able to go into the market with a lot less regulation if the Europeans do, in fact, bow to that, and actually will be sort of entirely dominated and monopolized by American tech?
I think yes and no. Right? I think one, it will actually be useful for anybody in the world. Any tech company in the world will have to play on a global scale. Right? I don't believe that most of the European companies that are going to be vastly successful will build only for Europe. Maybe they'll build Europe first, but they'll have to build global companies anyway. So they'll be in fierce competition, and they can't overlook the US market as a customer market anyways. It's large. It's fairly attractive. So anyways, they'll have to compete on a global scale.
Well, Christoph, Klink, thank you so much for your time this morning. Partner at Antler there, talking about the sort of double-edged sword of that American tech competition in Europe, and of course the prospects for tech in 2026. Now, some other stories making news this morning. Bloomberg has learned that Ken Griffin's Citadel is returning about $5 billion of profits this year to clients. That would bring its assets under management to $67 billion. Sources at Citadel's flagship fund say they gained about 9% through December 18th, putting the firm on track for its worst year since 2018. Shares in the enterprise software firm ServiceNow closed lower after announcing it will buy the cybersecurity startup Armis for $7.75 billion. That would be its largest acquisition to date. ServiceNow is looking to use Armis's technology to help clients fend off cyber attacks. There's plenty more coming up on the show. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's get to some of the charts we're paying attention to as we close out the show for the day ahead of Christmas here. We're looking at the S&P 500 reaching an all-time high. What we see in sharp contrast to any sort of fears around risk, the VIX at the lowest level that we've had throughout the year. This is the one-year chart. It really tells the story of what we had in sort of terror in the markets at around in April, around Liberation Day. You saw the VIX spike up, and ever since, the VIX has been sort of grinding lower and lower while stocks have continued to move higher and higher as we close out the year at a record in the United States. That was driven in part because of that GDP print we got from the United States, the strongest level in 2 years. It broke down to basically personal consumption and net exports. You can see that in this chart here. Personal consumption, the yellow, picking up the lion's share of that GDP print, 2.4%, let's call it, and the rest of it down to net exports in the contribution. And then we've got to talk about gold. This has been an absolutely breathtaking rally for gold throughout the year. Gold, this is the trend line for gold since 1975, and you can see there the trend line sort of moving sort of progressively up. But what we see there in those sort of turquoise lines are the standard deviations. The only other time we've broken out not one but two standard deviations was back in 1980, back in the great deal of panic and fear in the markets around hyperinflation, Paul Volcker, and the sort of oil crisis. We are not in a moment of crisis now, but we have gold really taking off, breaking through 4,500 a little bit earlier today. We're now just below that as we close the session today. That's it for opening trade is up next. This is Bloomberg.